We have evidence that the housing market is absolutely collapsing in Canada, with prices in some areas in real terms down over 50%. Yeah, you're not going to hear that anywhere, but thanks to my good buddy John Flynn, who supplied these charts, you can see just how bad things are actually getting here. So let's get into it. Yeah, it's absolutely unbelievable what's going on. Not a peep from the mainstream media, but if you look at some of these declines across the country, you have definitely got home prices that are down over 50% in real terms, because that's what matters. It's not nominal prices, it's what you can buy when you sell that house with the proceeds from that sale. So anyway, from the peak, you've got Cambridge that is down 25% essentially, Durham region 23.4%. And let me remind you that places like Cambridge were the boom towns during the pandemic. This is where everybody was moving to. They were moving out of the city and they were moving to places like Cambridge, places like Durham region. And this trend was just never, ever going to reverse. I mean, does it sound familiar? It sounds almost like what's going on in Alberta right now. You know, there's all these people moving here. It's just never going to stop. They've just realized everything is better, and they've also brought the jobs with them. Spoiler alert, they haven't. Anyway, let's get into it. Southern Georgian Bay, 23.2%. Barrie District, commuter town in Ontario, is down 22%. You've got Owen Sound and Grey Bruce that is down 20%. London St. Thomas down 20% also. Kitchener-Waterloo down 20%. You've got all these places. Guelph down 20%. Windsor, Essex, remember how great it was buying there? 20% essentially. I mean, this is just absolutely crazy when you really think about it, and you have to think about it in real terms, which all that essentially means is, you know, when you go to sell that house, if your purchasing power has gone down by 20% and the home price is flat and it's done absolutely nothing since you bought it, and let's just say your cost for selling is zero, then of course, whatever your purchasing power has declined by, you're losing that money. Whether you're actually realizing that or not, you're gonna actually lose that money. And that's what a decline in real terms is. You can have people like in Calgary, for instance, where they held real estate from 2008 all the way to 2024 and practically sold at a break-even price. But in reality, in their head, they're like, oh, thank God, I managed to get the same amount of money I got in 2008. But you didn't. Your purchasing power has dropped by like 60 to 70% since then. So you bag holding all that time, you have lost so much purchasing power due to inflation. And over the past 3-4 years, we've seen inflation that has skyrocketed. The CPI is just complete garbage, and that number is not accurate at all. So let's say over the past 3 years since the peak in 2021 and 2022, let's say that we've seen inflation of 20 to 30%, which I would argue is very low actually compared to what we've seen in reality. That would mean that places like Cambridge, for example, are down over 50%, which they are, but nobody is going to tell you that. Nobody's ever going to tell you that apart from me on this channel. So that's what people just do not understand when it comes to real estate, is you're losing money every year. So if your house is just flat and inflation is 2%, kiss 2% goodbye. And plus you've also got obviously selling fees and buying fees, which are incredibly high in Canada. Real estate is an illiquid asset. So essentially that means buying and selling can be very difficult if demand is low. And you can also see that the costs are very, very high for changing hands of this real estate. So your selling costs are really high as well. So you're needing like a lot just to break even. And that's what a lot of people don't even realize. And then you have to look at what's going on with mortgage payments. So guys, this is coming down the pipe. And obviously this hasn't even been realized yet in the housing market. That's what's crazy about this. Homeowners who are due to renew their mortgages over the coming years will face steep jump in payments, according to the Bank of Canada, with the median monthly payment increasing by more than 60% for those with a variable rate mortgage. So far, many homeowners have been able to weather the sharp rise in interest rates, with residential defaults remaining below 0.5% across Canada. The central bank said in its annual financial financial stability report published Thursday. But again, they're not acknowledging by how much defaults are actually skyrocketing right now in places in Ontario where the housing market have really gone down. You're talking about default rates that are going up over 100%. People are defaulting on their auto loans. People are defaulting on their credit cards. So it's stupid to just say, well, it's low right now. And the other thing that plays into this as well is a lot of people are able to sell right now. So that's all well and good. But what happens when they can't sell? What happens when the market gets really illiquid and they can't sell? So there are a lot of people out there that are selling because they cannot afford, they cannot even qualify for the increase in their mortgage payment. So essentially they're able to sell right now. But again, what sort of risk does that pose for the future? And again, it's something that the central planners and economists just don't understand. If more Canadians lose their jobs, the unemployment rate goes up, all of a sudden that stress, that vulnerability is really a risk of crystallizing, Governor Tiff McClem said in a press conference about the report. But guys, the unemployment rate is in fact skyrocketing in certain places. I mean, the unemployment rate in 2022 in Alberta was 4.9%, and now it's up at 7%. So that has gone up substantially, obviously. So all places aren't equal, but again, they're trying to treat the country as if everything is equal when it's far from like that. In reality, it's very nuanced. Like Calgary, for example, still has a booming real estate market, which is in this bubble, essentially. So it's very interesting what's going on. But really, when it comes down to it, when you have all these people that are looking at increases in mortgage payments, it's a huge risk for the financial system because these people cannot afford them. The next phase of mortgage resets, however, could be more painful. Many people whose mortgages are scheduled to renew over the next 2 years purchased their home early in the pandemic when the bank's policy interest rate was at an emergency low of 0.25%. It has since risen to 5%. And obviously, guys, you go over to this here and you can see that a lot of these markets are ones that have been declining since then. So a lot of these markets saw themselves peak when interest rates were at their lowest point. So all these people, a lot of them, bought in that area where interest rates were really, really low. So those people are the ones that are looking at a reset in their mortgage rate. So obviously, if mortgage rates are absolutely skyrocketing in Canada for these people who are renewing, then what is that going to mean? That's going to mean another wave of selling is going to come to the market then. Obviously, unless we see interest rates go down to 0.25%, which at this point at least is looking incredibly unlikely. Yeah, it's not looking good for those people. For those mortgage holders, the steepest rise will occur in 2026, so write down that, with the median monthly payment rising by more than 60% according to bank estimates. In 2025, the median increase is more than 50%. This year, about 30%. So obviously this huge rise over the coming years that we're going to see, 2025, 2026, is going to be a massive pain point for the housing market. And this is something that a lot of people just aren't taking note of. So obviously, with all these people that are looking at steep rises in their monthly payment, you have to also look at the chart that John Flynn made that also shows something which is incredibly important, because it's not just the percentage decline that you need to be taking note of, it's also the amount. And when you look at some of these amounts, it's just absolutely crazy, guys. You can see Durham region, it's down nearly $300,000. Do people have $300,000 that they're going to be able to put into the deal essentially to move this house because their interest rate has skyrocketed? They can't afford it. They're trying to sell. How are they going to be able to sell? All we're doing is we're using critical thinking. We're just using logical thinking essentially and thinking, how's this going to play out for all these people with these extremely low rates that really stretch themselves? Because let's face it, guys, if you go back to 2021, what were people buying? Were they buying shoe boxes? No, they were buying these big places. They were absolutely maxing out their budget, buying places with home offices, all these rec rooms that they could use so they could have a home gym and all these different things. Completely different world to what we live in now. So many people were maxing out their budget back then. And what is that going to mean when their interest rate, doubles, triples? They are going to see a huge rise in their mortgage payment. It's going to bite, and it's going to bite also in into the economy, if you think about it. So you have to look at real residential property prices because that's the only accurate measure when it comes to home prices. This is using the CPI. It has been updated recently, and you can see that now we're going back to the same prices as around 2020. In real terms, again, you won't hear the real estate industry talking about prices in real terms. And remember when they said real estate was the best inflation hedge that you could possibly want. And now I finally want to end with this because, you know, this kind of surprised me actually. So here's how many real millionaires there are in Toronto, Vancouver, and Calgary. And they're excluding housing wealth from this, which I think is fantastic because most people would include that. But if they're living in their home, that home is a liability to them, whether it's worth $1 million or $2. It doesn't matter. It's still a liability to them. So more than a decade of soaring property prices has minted a legion of house-rich paper millionaires. And that is important to remember. These people are only millionaires on paper, but the governments are still going to extort them for that. That's for sure. But an overpriced home does not a high net worth individual make. This makes no sense. And an annual study tallying up the wealthiest cities in the world by their number of liquid millionaires captures a more realistic picture of how real wealth in 3 of Canada's largest cities. Toronto had roughly 106,000 individuals with a liquid investable wealth of at least $1 million last year, giving it the 13th spot on the global list and the 5th highest count among cities in North America. And I think that is terrible when you really think that Toronto is one of the most expensive real estate markets in the world, yet when it comes to millionaires, it's actually 13th. So when you look at this list here, you can see Vancouver is all the way down at 31, which we would expect because it's a money laundering city essentially. I think a lot of that laundering is heading out to Calgary now. Basically, you've got Calgary that is sat at 57. I mean, you might as well just not have that on there. It's so far down. So you've got all these people that are sat on top of this high amount of house, paper, wealth, whatever you want to call it. But in reality, that's not real wealth, is it? It's just paper wealth. And that's what we've been saying on this channel so many times. That's why we've seen this variance in people's paper net worth by hundreds of billions of dollars each year. I mean, Chicago has more millionaires than Toronto. You can buy a house in Chicago for $200,000 easily. So again, it just shows what a facade these Canadian cities are actually in. They are not full of rich people like people claim it is. So anyway, if you've enjoyed this video, I would highly recommend that you check out this video here. It's incredibly similar to this one. And if you're looking for a VPN, go to expressvpn.com/marketmania. I will see you in the next one. Take care.